of the presenters files that I got to put in as well, but that'll get you started. It's quite a lot of data, so I thought I better just go ahead and get the pathway done now, and then keep adding to it as I go. Okay. Yeah, it should be in. Yeah, just check your inbox for an invite. If you haven't seen it, uh, just send me a note, and I'll double check. But you were on the list for distribution. Okay, so the only question we had tonight was from Peter, and it was only on the day trading side. So I'm going to cover that one first. And this was just some more details about how to use MACD and the four seasons. And my general guidance to you is use it as a guide for directional bias. All right, it will smooth out some of that choppiness that you're experiencing with trying to trade between RLXDs. And I'll show you that in a minute. And what I recommend you do is focus on pocket entries in the direction of the primary trend. So by that I mean, if the MACD signal line is above the zero line, then you have a positive bias, a long side bias, and you should be looking to take pocket entries to the upside only. And if it's below that zero line, you should be looking to take pocket entries or failures to the downside only. Now, what you're going to notice is that there will be a tension between the MACD bias and the owl. And that is almost by definition that has to happen. And you have to find a way to reconcile it with yourself about which one of those two styles that you want to trade. So you have to remember that the owl is a counter trend trade that comes at the end of a significant move. All right, so let me draw a quick sketch, and I'm going to show you why that mathematically has to create tension between the owl counter trend and the continuation pattern, which is essentially the MACD histogram. So again, so you'll see the MACD line at the bottom, that indicator, and then it'll be like this, and then it'll go here, and then it'll go there. And so that's the zero line right there, that dotted line. And if it's above that, we have a long side bias. If it's below that, we have a negative bias. Okay. Now we've furthermore defined this as winter whenever it's below the zero line and sloping downward. Now when it flattens out and starts going up, we call that the spring. So in the spring, you're below the zero line, but the slope of the MACD signal line is up. Oh, you don't see the drawing? Stand by. Okay. It's stuck over on the side. Sorry. So it's spring until it crosses the zero line, and now this becomes the summer until it gets to the top and rolls over, and then it becomes the fall until it gets back to the zero line, at which point it becomes winter. Now, one of the preconditions of the owl is that you have a unambiguous move to the downside. And since we're in the day trading course right now, we might start from the open. My favorite chain trade on this one is that hybrid frog. And so you put a 0.7 of a frog box bracketing the open, and then if it breaks out to the downside, now you're long. And then if it goes another hybrid frog box to the bottom, you now have seen it move 1.4 frog boxes. And since we say that 1.0 of a frog box is the difference between signal and noise, that's an S, then I'm defining a move of 1.4 frog boxes as an unambiguous move. So everything after this is really unambiguous. Let's say this thing goes all the way down here, and now you get some bottoming price action, and now it starts to hook back up. Well, as you think about this now, if this is now the bottom of that move, and if you were to put a 1.0 frog box off the bottom, you would say, oh, a move of 1.0 frog boxes off the bottom would be a signal that maybe this thing is going to come back to the opening, and so you would try to capture that move right there. Well, the owl is going to typically get in before it hits this 1.0, but it doesn't just buy a 1, 2, 3, which is like the earliest reasonable entry. A 1, 2, 3 off the bottom. It waits to see the RL30 and the RL10. That's the RL30. It waits to see a P1. So we have an unambiguous move, signal 1. P1 is signal 2. It crosses the dragon, that's the RLXD, that's 3. The dragon rolls up, that's 4. And now the 30 rolls up, that's 5. And now you can buy this owl entry right inside of here. Now, if you have an unambiguous move down, and then you go down and you consult the MACD histogram, what you'll notice is that you probably have gone from the winter and now we're into the spring, but you haven't yet crossed the 0 line. So you're entitled to have a negative bias here. So now you'll say, well, should I buy the owl, or should I try to fade that and play a P1 failure or a collapsing dragon? I would say that's the decision. That is the decision that you have to make. I play the owl because I find that after an unambiguous move down, and it's given us those 5 indications, then I'm playing really for a return up into here. However, I also recognize that the primary trend is down. And I recognize that the owl is a counter trend trade. So I really want to see an unambiguous move down here. It should be decisive. There should be no doubt in your mind that these directional traders won that battle, and they pushed this thing down so far that it may very well be an overreaction, like it went too far, and now you can buy something quality on sale. So that's the idea behind the owl. It's a counter trend trade. But if you look down here at the MACD histogram, you would see that it's still below the 0 line, and so you're entitled to believe that this thing could very reasonably fail. And so if it fails, this thing is going to, instead of going up, it's going to go down. So if we drew a line at the belly of the RL10 or the dragon, we would say a price breaking through the swing low is you must short that, and it's a collapsing dragon pattern, right? So if this owl fails, if it doesn't go up to here, but instead rolls over, then you have to buy it not later than price breaking through here. And then this little space in the middle, we would think of as a pocket. That means you're front running this collapsing dragon. Now, this is where on the owl with an RLXD, I don't mind scratching that trade. And we'll see a couple examples of that tonight. That's fine. And I don't mind stopping and reversing, and down we go. Because then I'm going to get whatever the size of this move was, I think I'm going to see that move down here. So This is a case where the owl fails quickly, and now you're back in with the primary trend, and that's actually the easier one to believe in because you've already seen the bears win that first leg, and then the bulls could not even make this do much more than just give you an owl entry, and then it fails right away. So remember, an owl that fails right away, that lets you get into the primary trend. But if the owl works, you should see that thing work pretty quick and let you get to no lose plus dinner for two quickly. So the longer it takes for this owl to happen, the less I'm inclined to believe in it, and I'm ready to stop and reverse and get back with the primary trend. But there will be this, inevitably, because of math, you're going to see that the MACD histogram indicator is probably still below the zero line. And actually, that's another way of saying what I just said. The owl is a counter trend trade, and that the primary trend is this downward move. And anytime the signal line is below the zero line, you should believe in moves that are failing, and you should not believe in the owl. Like, don't try to make it work if it's not working. It should work right away, and shouldn't take a lot of persuasion on your part. So don't believe in the owl, but you can still trade it. So you have to be ready for some feelings of indecision when you look at the MACD, what the MACD is telling you, and then what the owl pattern is telling you. Now, the other thing I want to say before we look at these charts that Peter uploaded is this unambiguous move really has to stand out at you. You got to really see a big move. Don't hunt hard for owls. You should be able to see them from across the rim. Okay. Let me shift over to. The other thing I want to say is you can use that MACD histogram as a guide for when to logically take profits after a good move. And that's the same thing, another way of just saying that unambiguous move and it starts to roll down. That's where you would see the MACD histogram in the winter and now become the spring. So you got the zero line like this, and this thing is now into the spring. That's a good time to be looking at taking profits at the end of that move. Okay, so the first one, just going to talk through the owl long with an RLXD exit. I can see that as an owl entry. I also see that probably as a pocket. Let's see, we had it open, moved up, came down, and then is resuming. I like that. I don't know if that's an owl. I don't know if this is enough to be an unambiguous move. It looks like the move was up and the move was down and the move starting up again. I don't see this as I don't see that price action as an unambiguous move. What I would like to have seen was a leg down, a second leg down, and then the owl entry in here. But the fact that this was a swing low and this was a swing low, and then you had an RLXD, if you want to call that an owl, maybe it is. The 30 has rolled up. The dragon has rolled up. You got an RLXD. You had a double bottom. I don't mind that entry at all. I really think I would maybe call that a pocket more than an owl, but I don't mind that. So what I want you to notice is that, that's a nice straight line, sorry. You have a zero, it crosses the zero line right here. So now you have a long bias, and that aligns with this long side entry. So you're perfectly aligned right there. Now, what I want you to notice is that it doesn't cross the zero line until here, until that collapse. So during that entire period of time, you're entitled to have a long side directional bias, right? Now, there's a couple places that are of interest here, and that when you have like here and like here, where the signal line crosses below its 5 period and then crosses back up again, it went from summer to fall, back to summer again. Those are good. I mean I really like the reentry. I think the exit there is premature. I mean, it barely got out of the dragon. It's still above the Bollinger Band mean, and you just cross back into the summer. Uh, I mean, if you enter here, your execution stop should be down about here. So I think you're quick on the trigger for that exit. I don't actually mind that exit there. And the reason for it is it got as high as this, but then the second leg it only got as high as this. So there's kind of a downward slope to it. And this lets you at least break even or maybe make a few pennies. So I don't mind that. I don't mind that at all. But here and here, both of these, you can afford to be long because during this entire period, you're long because we're above the zero line. Now, what I want to show you is, where was that rascal? Oh, I had a thought I wanted to show. Oh, yeah. So you're thinking of this one as an owl. Again, because I don't know if this is an unambiguous move. I don't think that same move the other way is an unambiguous move. This looks to me like up, down, up, and failing. That looks like a channel to me. And you're only talking about a 50 cents, maybe 75 cents of a channel on a $300 stock. That looks like a channel to me. So I don't see that as an owl, but I don't mind that as a place to get short. I mean, if you essentially are having like a Z3P kind of a deal there. But the short on this, now you have the Z3 lines pinching in here. So that means you could get long north of here or short from this pinch. And then when this pinch is even tighter, you can get short in here. And that's one where I think you have to have that one cancels the other, and you buy the breakout of the Z3 channels, and that may get you into this trade. Now I want you to notice that when that collapse happened, that also signaled the shift over into the winter, and so the winter lasts all the way to here, and now you're into the spring. You pick up a long side bias here at the summer, which is coincided with this thing. That's a good trade entry point right here. And now this little RLXD, all you did was you rolled over from the summer into the fall. Again, that's when you have price oscillating like this, the RL10 is going to parallel that, and the middle of the dragon is going to look at. You're going to get RLXDs forever on these long grinding trends. So you can't use the RLXD exclusively as a sign to get out, or you're just going to be getting out all the time. You should look like at the piece. So if I'm long here, here's my Z-2 stop, and follow it with that, and you're still in the trade. So during this whole period of time, from here all the way out here, you still have a long side bias, and you should not use that RLXD as an exit in there. That's my opinion. Try to stay with the primary trend. But I wanted to just show you the I don't think that's an owl, because this whole piece was not an unambiguous move. All right, next one. So this is on AMD, it looks like. So we got an entry here, rolls up. Is this an owl short? Yeah, I suppose that's an owl short. That you notice it just went into the fall. Here's where the summer goes from here to here, and now it's in the fall. And so we're above the zero line, so we're going to have a long side bias, but that's what an owl looks like. And so if you put an execution stop above the RL10, that's a good stop and reverse. Because now here, right where you got this exit, you go from the fall back into the summer. And so you can get this move. And that's not a bad exit either. And again, you could probably find an owl in here as well. I think that's a reasonable effort right there. This one, however, this is the trade that got away. What you had was a summer, a fall. It never even broke below the zero line, and when it crosses back above, this is your entry, and you stay in essentially the whole way. This might have scratched you out, but now you have a Z3 pinch, and you're back into it right here because it goes back into the summertime. And so that's a very strong signal to get in. And now you have this kind of move from about 31.60. And that's $1.50. That's 5% move. So once you kind of commit to this kind of strategy, you're going to get a lot of these like false starts, and they all look the same leaving the station. You have to get out of the mindset that, oh, this is the one that's going to work. They all look the same when they're leaving the station, and that's why you cannot believe in these, but you have to execute them at a level of risk that allows you to trade frequently and to take your shots. In the same way that in play in poker, there's no way that you can know ahead of time which is the hand that you should play. So you have to pay your ante and put the money in and pay to see some cards, and then the hands that are worth playing, you have to play them properly. All right. So they all look the same leaving the station. This one will just make you sick. Right in here, you got Z3 pinches happening. So maybe a little hard to see. So you got these Z3 lines that have pinched in right here. When they are at their tightest pinch, you just draw this line across and this line across, and you buy the breakout. So you're short right here. And guess what that equates to? It just crossed, it was below the zero line, so it's failing, comes up, touches the zero line, and then fails again. It just started in the winter here. And now you got this large move. That's a good signal to get out right here when it goes from winter to spring. And now, because of the magnitude of this move, because of the magnitude of that move, this now becomes an interesting spring into the summer. Now, there was not a whole lot of follow through, and on this one, I don't mind the exit so much, but if I'm already into this and I've had this much time for it to fail, and it didn't fail, it's sideways, and I'm long, so I'm already in. I could just put a stop down here and say if it hits my stop, I'll stop and reverse. So I might have tried to hold that a little longer, but I actually don't mind that. I don't mind that exit, but this is the one I want you to see. You got a Z3 pinch, and then it collapses decisively. Ooh. And then after a nice decisive move, you can use the shift from winter to spring to lock in the gain. Okay. Last one. I would just get in the habit of marking as you're studying this technique. Every place you got these little crossings of the zero line, just get in the habit of marking those so you can see the seasonality of things. All right, so you don't have much going on in here. This is all kind of sideways chop. You can see it in here, all choppy. This is really the first time that signal line gets outside of the zero line. So this is looking like weakness. And here's one where the signal line crossed and then failed again before it got to the zero line. So that says this is a shortable moment. So is this one. Because again, it rolled over below the zero line. And now here's your decisive move in the winter. Bam. And you can see that from across the room. See how in this entire area, the signal line is inside its little Bollinger Band mean down here. But this is where it broke out, this whole period. That's a decisive move. And now that creates the conditions for when you go into the spring. A spring move to the summer. Could you have cashed here? Yeah. Would I have tried to get short here? Yeah, because of this failure at the zero line. But then this one tells you that move ain't happening, so there's a fractional loss. And now you have a long side move from here to here. Doesn't have much follow through, but that's sort of what life is like right there. The move of the day was this piece right here. And there's some signals down here on the MACD histogram that are going to help you with that. So again, there's a tension between the MACD and the owl. You can't know ahead of time which ones are the ones. I really encourage you to use the MACD histogram to get the directional bias and then look for low risk pocket opportunities to get aligned with the primary trend of the day. The owls work best, in my view, in this opening 60 to 90 minutes because you have a gap opening, a sharp sell off, and then a hook back to fair value, or it fails again for another leg. That's my favorite pattern. Now I just uploaded the weekend report review, and this is really more for the swing trading guys. So when you listen to that, I want you to, if you are listening for swing trades. So these are the symbols that I always frame. Those are my frog champions, and then these were the continuation patterns from other swing trades. These ones here, you'll hear me talk about that in the parentheses. These are the ones that are the short continuations. So if I see market weakness, I'm going to be looking for those symbols to get short. There were some new mechanical patterns that fired. There's a whole lot of Walmart on that in that report. And then there's an auto framer available in Walmart. These are all better than 2-to-1 on the auto framer. Those are the symbols that were very tightly pinched. These are the ones that were stretched the most above their Bollinger Band mean on the long side, and these on the short side. Disney's in a max pain. You see another Walmart for a squeeze. When I looked at the 4 seasons of the MACD, These are the ones that struck me as worth looking at from the Four Seasons based on where they are in the life cycle of MACD histogram. The ADX one, uh, that's a new prototype report in there, and that's just connected to the idea that the best frog candidates are the ones that have large or high scores on ADX, and that means the daily ADX score being high means that thing has had an extraordinarily strong, like 3-week directional move, and so it has already been moving in one direction, and so that makes it easier to believe in a large directional move intraday as well as people come in to buy on dips or to sell on bounces or whatever. So these two out of the Dow were ones that were very interesting for very high ADX. And then these are the symbols that if there's any market weakness, again, I'm going to be looking at those. Those had strong negative trends or were stretched well below their Bollinger Band mean 30, or we're in the winter on the Four Seasons of the MACD. So there's about a 20-minute narrative of that weekend report, and from that I pulled these symbols, and those will be the ones that I'm going to frame up. Okay. All right, that's everything I wanted to cover tonight. Got some more work to do, and I'm going to post some trade frames in the chat room. I'm going to try. I'll get Walmart posted in there as well, and we'll get on with it. Okay. So that's everything I got. Pending any questions of you guys, I'll get this recorded, and I'll get this posted along with Tuesday's report. I'll get that posted too. It's still processing, but it'll be ready shortly. Okay. That's everything I got for you guys. Take good care, and we will see you in the chat room. Those of you on the December, I see a couple of you. I'm getting the Basecamp project tuned up this week for you. Got some baseline material that I want to cover, sort of like a boot camp. If you remember from the swing trading course, I identified about 30 some topics that I thought were like basic trading material. I'm going to do a recording of all those and try to put that into one narrative package, and then use that as the. I will add that to the swing course, but we're also going to concentrate on that for the December course as well. Okay, that's everything I got, guys. Take good care, and we'll see you in the chat room.